All right, everybody, welcome to the webinar for today. Hope you're all doing well. Usually I will do a webinar like this, introducing the next online class we'll be teaching. The next class will be starting a week from this coming Tuesday, April 27th at 1 Central. Do the usual that we always do, 3 weeks at Tuesdays and Thursdays for about an hour. And I don't know at this point which class. Usually I know by now, but with the market changing a bit, kind of breaking out a little bit to the upside in the market, and VIX kind of at the lowest levels in over a year, I'm just going to wait a few days till I get more settled. I always try to pick out kind of a strategy or portfolio class that would be most helpful, in my opinion, for what's going on in the market. And so probably we'll have something coming up in the next few days, which we'll email out to you. So I thought today would just be just looking at the market today and a few ideas, kind of what I'm looking at, trades that we're kind of looking at, and that type of thing. How many of you would consider yourself beginner? B, beginner, I, intermediate, or A, advanced? How many would consider what level would you consider yourselves? Beginner, intermediate, advanced? It seems like more intermediate. Petru says, how about a class on put credit spreads, since they're the only thing that's working these days? Well, they are an effective trade when in an up market. There's other stuff that's working, but that's a good idea. I appreciate it. If anybody else has any ideas on what they think would be a beneficial, let me know. Yeah, Dave, Robert says, ask Petru to ask him a month from now. No, but I think the bigger picture is running a business, running an options business, and having different strategies. I think that's the key. We don't, here at Sheridan Mentoring, just look for, which way the market's going and play that, we play a lot of range bound stuff. Petru says, I got decimated in the last 2 weeks on SPX calendars. Calendars have actually been working pretty well, so I'm not sure, Petru, how you've been doing it, but it hasn't been bad, and it's been pretty good. Calendars have been pretty good the last 2 weeks in the community. I think it's yes, as you've seen in the SPX price chart here, it's been going up. And so obviously anytime a market is going, that we have a little more trend versus range bound, you're going to have to tweak these a bit. And I could talk about that maybe a little bit today. We can start with one idea for, if you just take a calendar, since Petru and Frank talked about that a little bit. I mean, let's just say here's a basic calendar trade. Let me just see, we've run up a little bit here in the market, but let's just say we put on, just using this for discussion purposes, how many people have never done a calendar? How many people have never done a calendar or not sure about what a calendar trade is? Is there many who haven't done a calendar or know what a calendar trade is? Yes, no? Yes, I've done a calendar. I kind of understand it. No, I haven't done one. Okay, and that's fine. And I think, like any of these things, it's just practice. Start small, paper trade till you're comfortable with, you understand the concept, and then do one. But let's talk about a calendar for a few minutes. And it's a defined risk spread. And a calendar is really a trade, and I'll explain it a little bit, for that we use for weekly income. It's kind of a range-bound trade, and that we do. So there's many trades, but let's face it. Every trade is a craft. There's no good trades or bad trades. I think it's just learning through them. But let's talk about, how about before we get calendar, let's just talk let's talk something even simpler. Here's a put vertical credit spread, right? I did an example. This is kind of an example of something we do in the community. It's about 3 weeks out. Let me just see here. How many have done vertical spreads, like vertical credit spreads? How many of you, yes, Y, or N, no, have done vertical credit spreads? And so here's an example of one. It usually puts, but again, we look at it a little different philosophy, right? Would it be fair to say that most of you look at vertical credit spreads from a directional? Hey, I think we're going up. And when I think we're going up, and when the charts align with it, I'm going to do a put credit spread. Or when I think we're going down, we're near resistance, I'll do a call credit spread. How many do it like that? And I think most people do, right? We do it a little differently, but remember, here at Sheridan Mentoring, what we focus on 90% of the time is risk management. How many agree that if we walked into Chipotle, right? You guys, everybody familiar with Chipotle? You go in there for your burrito. If we go into Chipotle, could we sit down with the cooks in Chipotle and explain it and just give them enough information to be dangerous, how to put on a put credit spread? Can we explain to the cooks at Chipotle how to put on a spread? Yeah, I think we could. My point is, Eric, and I see what you're saying. My point is, could we teach the cooks at Chipotle to manage a credit spread in an hour? Probably not. And the point is, but I want to encourage you with this remark. Yes, it's important as you learn any craft, cooking or options or tennis. It's important to learn it, learn the terminology, learn the big picture and everything. But I'm going to tell you, the most important thing, I mean, there's many things in options trading, but one of the top 2 or 3 important things in option trading, you know what's great? It has absolutely nothing to do with your knowledge of options. So in other words, we'll use a nice Italian guy, Frank Silvestrini, right? Since my wife's maiden name was Trupia, Sicilian. But my point is, the most important thing, what's wonderful is, with options trading, to me, has absolutely no, even if Frank couldn't spell the word options or gamma, right? Or butterfly. You know what the most important thing is? If Frank is going to put on a calendar trade or a credit spread every week, you know what the most important thing is? And Frank it has nothing to do with his knowledge of options. It's, can Frank keep his consistency? Gary's right, but can Frank keep his losers not far from his winners? On vertical credit spreads, you generally get the probabilities in your favor. But let me ask you, how many recognize in your bank account when it's going down? Is that public information? Or when it goes up? Are you aware of that? Do you need to take a class to learn how to read? Is that something that's manageable, that you can read your account and know if it's up or down? Well, if you have a brokerage account, are you able, in other words, does Frank need a class in learning to know if he's looking to make $500 on every trade? Should Frank, how much experience does Frank need to know when he's down much more than 500? Is that something that takes a lot for Frank or Gary to learn? Yes or no? Should you be able to understand P&L? So usually when people say, I got killed on this trade, I got killed on this trade. Why did you get killed on the trade? It's not because of the market in most cases, right? Right? If I'm doing a credit spread here, right? Let's take a look at this, right? So here's a credit spread example. For those of you who've never done a credit spread, this is out to May 7. So we're about 3 weeks out, right? So this is the strategy, and we'll talk a simple plan, but I just want to make a few points here. So we're going to sell the 40-20 puts. I'm using Thinkorswim platform, by the way. So I'll try to explain it just for those of you who don't use it. You can see, and again, there's many good platforms, right? Thinkorswim is very good. Tastyworks is very good. Also, and some interactive brokers is good. They don't have the kind of the analysis capabilities as well as a Tastyworks or a Thinkorswim, but there's many good platforms out there. And so in this Thinkorswim, the blue graph is the graph of how the trade is, and here's the P&L, in 21 days. The purple graph is today. Most option platforms will give you a couple pictures. What's the graph today, right? Today, if I put this on, and what's the graph at expiration? Now, here's where the underline is right now, 41.65. So in this example, I'm selling the 40-20 put out of the money and then just buying this strike as a hedge. So I'm 41.20. My short put is 145 points out of the money. Everybody with me? Yes? Did I lose anybody so far? Right? All I'm doing, this is called a put vertical credit spread. I'm selling a put 145 points out of the money, and I'm buying a put against it just as a hedge. That's it. So this spread right now is going live for like, let's call it 225. That's pretty much. So it's going for a $2.25 credit. Your margin or risk of the trade, the capital you have to put up with your brokerage firm, or the capital you have to put up, or your risk, is the difference in the strikes, 2,000, less your credit, would be 17. What is that? 1775. So this is called your margin or your risk. That makes sense? So we're just talking about how we set this trade up. And I would consider this a high probability trade. Yeah, this is a typical starting point for this type of a trade, kind of how we do it at Sheridan Mentoring. And why is this a high probability trade, right? How do we pick the short strike? Well, a lot of times I'll pick the short strike in a credit spread by a delta of 20. So this had a delta, it's a big word, delta of 20. What does that mean in English, Spanish, or Swahili? It means that there's only, because this strike that I sold has a delta of 20, here's what it means. There's only a 20% probability that we're going to finish under 40.20 at May 7 expiration in 22 days. Let me say that again. There's only a 20% probability we're going to finish under 40.20 in the next 22 days, right? Is that good or bad for this trade? Is that good? Does that mean that there's probability? Yeah, that's good, right? So could it happen? Anything could happen, but the probabilities are that we're not going to finish under 40.20 in the next 3 weeks. Femi says, does VIX factor into how and which trades you take? As Sylvester Stallone would say, absolutely. VIX plays a big role into, it's part of the equation, Femi. It's not everything and all, but it's a very important factor into how we look at the world with VIX. So this is a put vertical credit spread, right? So we have good probabilities in our favor, no risk on the downside, and the potential return on this when you start would be your credit, $225 divided by your capital, and this is just doing one contract. So if you took $225 divided by 1775, so the potential return would be about 12% in 3 weeks, right? Everybody see that? Yeah, I locked the credit spread. Thank you. Yeah, just so we can analyze. That's kind of where it's trading at. So I just locked it so we would just so the graphs and everything would be pretty stable there. But that's kind of where it's trading at. And so, but when I look at this trade, a put credit spread, I look at it in the long portfolio. I call it, for Sheridan Mentoring, we will look at managing option trades that kind of fit in 3 boots. A long portfolio, and long portfolio trades will be a put credit spread, a covered right, or in Sheridan Mentoring, we'll focus more on strategies with just options, even though a lot of students have stock. But a much cheaper alternative and better yield than a covered right is to do a long diagonal. It's the same thing as a covered right. You're just replacing the expensive long stock with an in-the-money call, 3 months or a year out. And then cash secured put, a lot of people will do those, but those can be very expensive because your brokerage firm will charge you a lot of money to just sell a put. They'll want you to have enough money in your account to buy the stock. So instead of doing that, we will do wide put credit spreads. But the point is, anything in the long portfolio you're taking the view of an investor, neutral or bullish over the next year, right? Whether it's the market or Apple or Microsoft or whatever stock. So does everybody see it? So this part of the portfolio is more intentional versus the speculative part of the portfolio. So you can put credit spreads in this part of the portfolio, which we do, and we do the put credit spread because especially like in SPX or RUT, the indexes, because the out of the money volatilities are a lot higher than the out of the money calls, for the same delta, you can go a lot further out of the money on the downside than the upside. But most people, how they do credit spreads more from the spec. Spec is, I have an opinion based on Fibonacci, late night pizza, Joe the policeman down the street, whatever, right? And you could use vertical credit spreads for spec, right? I think it's going down, call credit spread. I think it's going up, put credit spread. You can buy options, buy calls, buy puts, buy options. You could buy, so in other words, with verticals, you could sell them or buy them. Buy a vertical, sell a vertical. You can do directional calendars, but this is spec. So in the long portfolio, some of these are short term, some of these are a little bit longer term. These credit spreads are 3 weeks. Again, we look to diversify as much risk as we can. But anyways, getting back to what we talked about earlier, right? Let's make it simple. So if Frank looks at this put credit spread, he says, look, right? This is my credit, right? 225. That's my risk. If it's going against Frank under the laws of the Geneva Convention, can Frank Silvestrini, can he close this trade whenever he wants? Or does he have to get annihilated if we go down? Is Frank allowed under the laws of the U.S. Constitution to close this trade? Yeah, if he has a plan, right? So let's talk about a plan for a second. On this trade, I'm bringing in a 225 credit, okay? I might say I'm trying to make 10%. 10% not on this, 10% on this. So what's 10% of 1775? Round it off. Don't use a calculator. Wing it. What's 10% of 177? 10% of 1775. Come on. You guys are what more? I'd say about 170, 180 bucks, right? So if I want to make 10%, and again, I won't even talk adjustment state. If I want to make 10%, and I sold it for 2.25, and I want to make 10% or $180 of this, where would I put my order in to buy it back? I sold it for this, 225. I want to make about 180 bucks. I buy it back at 45-cent debit. Does everybody see that? Yes, no? Does everybody see how I got that? If you don't, let me know. That's okay. Now, here's the kicker. This is why Frank or Dan Sheridan or nobody has any excuse. If I put a plan and say, look, let me ask you a question. If we put credit spreads, right, unless we have a year or two where all we do is go down, but the point is, if we're selling a 20 delta put or call, whatever it is, should we win a lot more than we lose if we're selling a way out of the money option? Should we win a lot more than we lose over a year? If we're selling a 20 delta and have the probabilities in our favor, theoretically, should we win a lot more than we lose on these trades in a year? Yes or no? Absolutely. Absolutely we should. So the only problem is if I'm making about, let's just, for ease of example here, I'm just just grazing the subject here. If I'm making 10% and I'm going to win most of the time, if I can keep my losers near my winners, should this thing work out well? Yes or no? So having a plan is key. So let's just say I'll put the losing number maybe a little bit higher to let the probabilities kind of work, right? Give it a chance to breathe. What do I mean near my winners? All right, here's what it means. Frank, as I say to Frank, hey, Frank, what's my winners look like? How much, Frank, are we winning on our, how much are we winning when we win? What's the dollar number? Give me a dollar number, Frank. What's the dollar number? Give me a dollar. 10% of 1775, Frank, is what? What's the dollar number you're 175? So here's what we mean. If Frank Silvestrini, Frank, where are you from? Here's the key. If Frank Silvestrini from DC puts on put credit spreads or call, whatever, but a 20 delta, and he can keep the losers not far from 175, he's going to be in good shape. Now, what character quality would you say it is if we were to tell Frank, Frank, you're going to do this every week? You can't let the losers go that much more than 175. What's going to be the key character quality to do that? It's not an options thing. What is it? Discipline. Yes. Discipline. You said it. It's it. It's not, does Frank understand Fibonacci or Fibonacci, or does Frank understand the gross national product, or does Frank understand what the Fed does? No. Frank knows dollars, right? Right? Frank's wife can say, hey, Frank, I heard Dan say you make about $170 on a good trade. So Frank's, your wife could do it for you. Frank, Dan says keep it close to the winners. So Frank, if you're down $200 and you don't get out, you're not getting dinner. How's that? Frank, would that work? If your wife said, Frank, look it, you're making about 170. When you're down 200, get out or you're not getting dinner. Would that work? What do you think? I think it would work. I think it would work. Frank says I might lose some weight. And then Gary says, is she a good cook? Karen says, does your 20 delta change as the VIX changes? Good question. Not that much, but here's the big kicker. Right now, we're at the lowest volatilities in the SPX in 13, 14 months, 16s. So to 16 volatility on a 3-week credit spread, we're getting 145 points out of the money. So what would be a difference in an SPX credit spread if the VIX were 30 instead of 16? Instead of getting 145 points out of the money, we'd be getting 300 or more. Does that make sense? The credit, would we get a lot more credit? Not really, maybe up to 250. But the biggest difference with a high VIX environment for a credit spread is you get more room, right? So that's why it can be beneficial doing a put credit spread when the market goes down, but you're scared at that point, right? So now let's get to the other side of the coin. What's 15% roughly of 1775? What's 1775 times 15%? It'd be 260, 266 or so. Let's make it 250, right? So if we have to tell Frank, if you're selling this every week for around 225, right? And you don't want to lose more than $250 because your winners are about 180, 170. Where would I put my order to buy this back? If I don't want to lose more than 250, where would I have an order to buy this back? Eric gets the Italian Spaghetti Award for today, $4.75. So what does it come down to, right? Frank's wife can say, look, Frank, you're selling this for 2.25. If it hits 475 and you don't get out, no spaghetti, right? No dinner. You know what? He'll learn to be disciplined and get out. And again, is there technology at these brokerage firms that Frank can put an order in to get him out for this price? Are we living in the ice ages? Can Frank automate this process? Yes or no? With alerts or orders? Yes. Right? So Frank says, Dan, do you always use the collateral percent? What does that mean, collateral percent, for targets versus the actual debit or credit? Frank, I'm not sure what does that mean? Do you always use the collateral percentage? Well, yeah. I mean, I got to figure dollars, right? Yeah, this will be hosted on YouTube later, Femi. Yeah, right. I mean, don't you want to know? I mean, this is dollars. This is no different than if Femi gave me 10 grand to trade. Femi would say to me, hey, Dan, here's 10 grand, trade it. I'll give you 20% or 50, whatever percent of the profits. We're talking dollars, right? So if I do one of these, 1775, I'm looking for a certain return for profit, and there's a certain loss that I want to leave. You got to have some kind of way, right? I mean, there's other things we could talk about, adjustments and stuff, but this is kind of the first step. So the point is, if you have a plan and stick to it, is it difficult to have that one trade that destroys you? Yes or no? If you actually have something called a plan, and number two, follow the plan, it's very difficult to get killed. And especially then it gets into a bigger picture. We do a lot in SPX, right? So we're not, how many of you chase the flavor of the day? If Tesla's busy, you play Tesla. If Apple's busy, you play Apple. How many of you? Yeah, I mean, I never do that. Maybe for the spec part of the portfolio, and I know that's exciting, but we're looking to make some money. We're not looking for excitement, right? If you want excitement, where can you go for excitement? You can go to Vegas and get a good dinner, right? Right? So, and it's not that spec stuff doesn't work. It's just all, running this like a business, right? Running it like a business, not like a casino. And so here's a credit spread, right? Real quick, here is I'll just give you one more, and we'll talk more. We'll send some information when we, to you guys as far as what will be the next class. Again, I'm thinking what would be helpful, but I'll just give you real quick. Here is a calendar trade. And for those of you who've never done a calendar, again, all we're doing is, calendar trade is another thing we use for, this is different. This is not the put credit spread would be long portfolio, more neutral or bullish, kind of the view of an investor, right? That's what covered rights. You say, who would do covered rights? I like this stock or the market over time. That's a put credit spread. Here's more of a range bound strategy that we normally do in range bound markets. I'm going to talk, I'll just briefly on this. So this is going to be, I'm going to talk a few things about this. So this is a calendar spread. It's a defined risk spread. And let's say it's trading at $6.70 debit. So $670 is your risk here. So the whole key, if you look at the P&L, you can see if this is the underlying 4168, do we want the market to move a lot or not move a lot to make money? Just forget if you don't know anything about calendars. Look at the P&L. This is the expiration graph in 2 weeks, 2 weeks from tomorrow. It's a 15-day trade. You don't want it to move a lot, right? Right? And if you spell it out in English, how this thing works, so let's put some real prices here, right? The May 5, 4170 calls. One second here. So the May 5, 4170 calls. So I'll just spell this out a little bit. The 4170 calls right now will be done here in about less than 10 minutes. The 4170 calls are going for about $48. The April 30 let's see, April 30, Petru says the SPX moved 300 points in 15 days. No. Today's April 15th. March 30th, we closed at 39.58. So let's say 39.60, 40.60, 41.60. We moved about 200 points in 15 days. Yeah, I didn't look at 15. Yeah, you're talking 3 weeks. All right. So here's the thing. The April 30th, 4170s. We'll finish with this. April 30, 4170s are trading at 4150. So if you've never done a calendar, let's go through this together so you can at least get how this thing works. You're paying $670 on a $670 investment. How in the world could you possibly make over $1,000 if we close at that strike of 4170? You with me? How in the world could you make way over 100% if it was a bullseye and it closed at 4170 2 weeks from tomorrow, which is 15 days? Here's how it happens. Here's how it happens. April 30s, we're selling for 4150, right? At expiration, right? In 2 weeks, at the expiration at April 30, if we close at 4170s, what are these going to be trading at that you sold for 4150? 2 weeks from tomorrow, on April 30th, you sold these at 4150. Where are your shorts going to? Zero. Agree? Now, the question is, in 2 weeks at April 30th, right? How many more days till your May 5th expire, right? So if you look at April 30 is 15 days to go. May 5th is 20, right? So here's the question. You ready? On April 30th, how many more days before these expire? On April 30th, how many more days before the May 5s expire? Frank is sitting there on April 30th. How many more days for these? So as an example to see what these May 5s will be worth with 5 days left, let's go into the option chain and look at an option today at the money with about 5 days to go, right? Now we have here's 4 days to go. Here's 6 days to go. Let's just look at the one with 6 days to go, just to give you an idea. What is an at the money option with 6 days to go? At the money, what is it trading for? Like $22. Okay. So what are we saying in English? Oh, $22. It'd be less, but does everybody get the point? The April 30s in 2 weeks from tomorrow, April 30th, the 4170s, if we close at 4170, they're worth 0. The May 5s, you bought them at 48, you lose a lot, but with 6 days to go, they're going to be worth, this may be high. Let's just call it, well, but they're going to be worth $15 to $22, right? But if they're worth 22, you paid this and you sell it at that. Does that make sense? And that's where you get almost $1,500, right? If you pay $6.70 or almost $7 and you sell it at 22, right? It's about $1,500 profit. Well, that's what your P&L is saying, right? If you look, does that make sense a little bit for some of the beginners? How the heck you make money in a calendar? Does that make a little bit of sense? How do you make money in a calendar? But let's just finish with this. So Petra was saying, geez, the market's gone up. It's been horrible with calendars. Well, let me ask you. So having a plan, usually with calendars, this is the underline and we put this on, right, at the 4170. And let's just make this real basic. Can everybody see that this is our profitable area between the blue lines? When it goes outside that, the P&L starts going underwater. Does everybody see that we'd want it to be in the profitable area? Does everybody see that? Yes? No? Just from a visual, forget option Greeks and all that. You want it to be in the profitable area. Well, let me ask you, as it starts to get here near getting outside the profitable area, right? Under the laws of the Geneva Convention, can I do something? What if I do something like, okay, we have this calendar, okay? Under the laws of the Geneva Convention, what if I added another calendar? Okay, we go up in this area, right? Let's say 4210. Right now, we're at 4170. This is a 15-day calendar. We're looking to be in this no more than a week. Let me say that in Spanish. It's a 15-day calendar. I'm looking to be in it no more than a week. If we're at 4170, right, and I get it before we get in a lot of trouble at 4210, under the laws of the Geneva Convention, let's say I added a calendar 30 points up at 4240. does that give me a lot more room? Do you see how I open the tent here? Right? So now I have one calendar at 4170, another one at 4240. And let me ask you a question. Here we are at, I think we're at 4166. What's the, and I said I'm only going to be in this a week. What's the expected move? Right? Here's 6 days. But what does this say the expected move in SPX is for the next 6 days? So let's say I'm going to be in this no more than 6 days, which is probably more reality. What do they say? That's a standard deviation move. There's a 68% chance we're going to be up 53 or down 53 in the next 6 days. So let me ask you a question, right? So the expected move is 53 points. I put it on today, 4166. And if I make an adjustment before it goes out the profitable area, now for me to really lose much, my 4257 on the upside. You see that here, 4257. My point is 4257 and we're at 4166 with an adjustment on time. And this is risk management, just giving you, if I adjust on time with risk management, now I've got over 100 points of room. Here's the expected move. Here's my point. Does it hit? Yes, options, cooking, playing tennis, doing your nails can be very horrible if you don't know what you're doing or have a plan. Agree? Why don't you have your grandchildren at 10 years old drive your Ferrari? I'm joking. Dan, they don't know how to. Okay. Should you guys should you put on trades if you don't have a good plan what to do if it goes against you? Yes or no? Should you trade options if you don't have a good plan what to do? No. But 80% of the population trades without having a stinking clue what they're going to do if it goes against you. Same things. Anyways, folks, I better run. We'll be having a class which will be like this for 3 weeks. A week from Tuesday, I will think of a good topic that'll be helpful. And we'd love to see if you have any questions. You could email me, Dan at SheridanMentoring.com. Again, Bill says, how do you close out a double calendar once you get it? You can close it out as a entire trade, or you can close it out separately. It depends on if you're up money, you're down money. But anyways, well, thanks everybody. Work on the craft, right? And we'll talk to you later. Thanks. We don't have a name, Femi, of the upcoming class. Well, I'm working on that now. We'll send you some information out on that with a description. I'm just kind of waiting to see what I think would be a very helpful class for the current market conditions. So we'll keep you posted. All right. Have a nice day, everybody. Thank you.